What is asset allocation and why is it crucial? Asset allocation refers to distributing your investable surplus across various asset classes according to risk profile, time horizon, and financial goals. Each asset class behaves differently across different economic cycles, and asset allocation reduces your dependency on a single asset class to generate returns. Consequently, it mitigates volatility of portfolio returns. But how can you implement asset allocation? Asset allocation can be done with the following steps. Determine your financial goals. Ascertain your risk appetite. Determine the optimal asset allocation. Invest in different asset classes directly and rebalance the portfolio periodically, whenever required, or invest in a hybrid mutual fund scheme. Why invest in a multi-asset fund? Asset class returns vary over different economic cycles. Timing the market for various asset classes becomes difficult. Multi-asset fund helps investors avoid such inefficient investment decisions. Diversification leads to less volatility of returns. A multi-asset fund, which invests in multiple asset classes, can be considered a viable investment option to meet your diversified asset allocation needs. Presenting HDFC Multi-Asset Fund. HDFC Multi-Asset Fund aims to generate long-term capital appreciation or income by investing in a diversified portfolio of equity and equity-related instruments, debt and money market instruments, and gold-related instruments. Current investment strategy of HDFC Multi-Asset Fund. The scheme invests in a mix of equity, debt and gold-related instruments with total equity allocation, including hedged and unhedged component ranging from 65% to 80% of total assets, of which unhedged equity can range from 40 to 80% and hedged component can range from 0 to 25% depending on market conditions. Debt instruments allocation ranging between 10 to 30% of total assets and gold-related instruments between 10 to 30% of total assets. The scheme adopts a financial model to indicate the extent of unhedged equity allocation by considering factors like trailing 12-month price-to-earnings ratio, 1-year forward price-to-earnings ratio, trailing 12 months price-to-book value, earnings yield by GSEC yield. The equity allocation helps in long-term growth by investing in companies with sound financial strength and sustainable business models. Debt allocation aims to give stability to portfolio. Maturity profile of the debt portfolio depends on interest rate outlook. Gold-related instruments help to hedge the portfolio against market uncertainties and inflation. The scheme invests in gold ETFs. If you are looking to invest in a diversified portfolio which meets your asset allocation needs, invest in HDFC Multi-Asset Fund today. To know more, give a missed call on 73974 12345. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.